Okay, here we are live, sound is good. Thank you for the feedback, everybody. Hello Peter, Rosa, welcome, great to see you on, William, Scott, and thank you everybody for being here. It is an hour early because of the US time change. It is 1800 on the 9th of March. Now I've got a session prepared for you, some mindset notes, and then a really good question came in, so we're going to go through that in detail. So first to kick us off, a little bit about mindset, psychology to begin today's educational. Personally, I suffered a loss recently, a serious one, and it has me pensive, deep in thought about the depth of the loss. Now, it's not a trading loss, I must add, a much more significant but very private loss. I won't share details, but I can tell you that things got exponentially better on March 8th. Anyway, it leads us to this. Accept things the way they are, but try to take action without overthinking. Don't let perfectionism stop your progress. Progress is better than waiting for the perfect moment. Acceptance is not surrender, it is clarity. It removes the noise of resistance so energy can move where it actually matters. When something cannot be changed, fighting it only drains the mind. When it's seen clearly, the next step becomes simple. Calm first, then action. And in trading, there is no holy grail. There is only probability. Now then, onto some chart art with a rather great query in from Paul. Many thanks to Paul first, who wrote, I was looking at your NAS trade today. It was in a message, obviously backdated now, March 5th, shared on YouTube for all to see and for confirmation if anybody who watches this recording later wishes to see that. Paul continues, I would need 15-minute Confluence off the purple line to support your buy. An idea for Monday's clinic. Can we explore the precision and the edge of buying above pink and selling below pink? And I'm only going to give you the colours there because we're sharing this publicly, and whoever watches it publicly can figure out those levels for themselves. Brilliant anyway so far, but it's also a chance for us to view some of our less used but very valuable and telling indicators. Many view the 50-period EMA as a turning point, and indeed some less ethical indicator salespeople will hide it behind something. I'll give you an example. Harvey joined me through a London company that we're all aware of them. They used to be called Knowledge to Action or something, but they used to sell a 50-period sniper, and it was basically a bounce off the 50-period EMA, and it would go bing, 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 like a gun was being fired as price bounced off that line. Sometimes the line would be rejected, sometimes not. It's very sad that someone would sell such a thing, though, as a strategy. Anyway, it's a thing and it happens. Where were we? Behind, yes. They even have an arrow offered up to us on screen indicating buy or sell. However, when we view our pink line, it's not just some random round number, but it's a factor in the Fibonacci scale of numbers, a natural, respected phenomenon. We developed the rapids. I'm first going to put the pink line on. There it is, the pink line. Now we've gone back, this is the 1400 hour, 1500 hour, so that's 1430. And if you look at the date, you'll see it's the 5th of March, and that 1430 corresponds with the post that we put up on YouTube, live trading. We did the analysis from 1426, and we said we're going to go long above, and I forget the level, to be honest. It was probably 24,000 990, might have been 25,001, but we were placing buy orders here. Now remember, this line, this pink line, was very visible to us. I've only put the crosshairs on so you can see the date, 5th of March 1430. Okay, we can see that pink line trailing, and it follows before and ahead of price. It's with price, so we can predict where that line's going to be. We can predict where price is going to cross the line. We can estimate it for sure with a high degree of probability. Something else we can look at is divergence, lower lows, higher lows. Divergence within the indicator, not the first time I'm drawing that. So we expect a bigger move, and then we can look for patterns of X. In fact, I won't draw that one. I'll erase that. I won't worry about erasing that one. I'm going to go on here and find me a drawing tool. I'm going to use this one, the butterfly. X, A, B, C. C is lower than A in this case, but we've got divergence within the indicator, so it did run. We would probably in my session have been looking for 25.1. Don't quite know if it's gone there, but let's see. From 25,000 to 25.1, yes, it went there and a little bit. Kind of perfect, really. Went a bit more and then it came back. No problem with any of that. Happy with all of that. It is, to me, saying that everything that you believe about your analysis is still working, James, and you don't need to worry. You can just go ahead and do what it is you do. So we view the 55. It's not a random round number. It's the pink line. It's a factor in the Fibonacci scale, a natural respected phenomenon. We also developed, for those of you who remember, the rapids strategy. And I can confirm that the 62 period Bollinger Bands with a 0.2 standard deviation closely follows or tracks the pink line, and there it is to boost. You see, it closely follows and tracks the pink line. Now the rapids is a standalone, and thank you Rosa. Rosa says, I love the rapids. Yes. The rapids as a standalone rule states you may go long on the first closed dry bar, given that anything within the water is wet. This is a river, it's rapids, so this bar is wet. That one is a dry bar. You can go long. There would be your invalidation or your stop, and your target would be 2 times that. And if we look, yes, it's gone once, it's come back to a break even, but then it goes 2 times. So you get 2 bites off a pivot, a fractal, and some more higher lows, lower lows, higher lows, divergence within the indicator, a nice 5-point fractal there to allow you into that one. So if you know all of our regular strategies, if you know about the STL, for instance, then you're laughing your socks off then, because you factor that in and it becomes a serious no-brainer. Not only did we develop the 62 period Bollinger Bands with that very tight standard deviation, we also, hang on, rapids rules denote buy or on a dry bar, sell on a dry bar below. So this would be the first dry bar below, and you could sell from there. The close of that bar is a sell, and you get a whole 60 seconds when that bar is closed, you know, to figure out, do I want this? Seems to be right. Stop the other side of the river. You'd be in a sell from there. Let me put my cursor on. So that would validate your entry because that bar is dry. That would be your stop. Whatever 2 times that is, I'm going to go 1, 2. There you go. There's your target, and it's delivered right there. And that pretty much is the rapids as a standalone strategy. But we also used a Hull moving average in our early or initial educational sessions and your ongoing training with me. It was introduced largely by one of our members who said it most closely tracks price. Thank you, Peter, for that. And it does. We color coded it. We said red in a downtrend, green in an uptrend. When we look at all those 3 things, and we don't need to, we can say, nah, you're overkill. Yeah, I like you because you give me the stop loss, but you're also overkill. We could just say it's just a pink line. We could make it thicker so that it more closely represents. And how would we do that? We could say it's 2, we go 3, 4, 5, 6, 8, we make it thicker so that it more closely represents the rapids, just to visualize the idea of above and below kind of strategy. Notwithstanding any of that, the trade on Thursday, it was Thursday, wasn't it? The 5th of March anyway, it worked, and it worked very well. We have our levels, we set the levels, and we traded the levels. But yeah, the whole moving average very closely tracks the price. Yes, just reading through the notes. Oh yeah, and red for sell, green for buy. Just to factor in your idea about what you're allowed to do. The line is green, you're only allowed to buy it. The line is red, you're only allowed to sell it. And we did look at this one being a dry bar, and you're only allowed to sell it. So happy days, you're in the sell. This pullback, you all know about my levels, and you know about divergence. And if we look at it just once more, lower lows, higher lows, divergence within the indicator again. You're not going to let it come back above something significant. You're going to take your pips. And there are plenty of them available. There certainly were for us on Thursday, if that was indeed Thursday. And of course, finally, add in the MACD for divergence, and we are all, sad to say I am, right back where we are supposed to be at divergence, rejection of a line, signal. 3 special things. However, I'm going to make it a bit more complicated. I'm going to say that someday some clever egg that writes the formula will write the formula, and I don't know, maybe I've got it already, and we'll see. Here's an attempt at the formula. We're going to say D plus R, R being the rejection of a line, so we're going to do that, and we're going to do that. D plus R equals a signal. It's probably, the equals isn't probably right. It's probably, if I was to delete that signal, clear all my drawings and do it again, because I want this to look right. D plus R of a line, diversion plus the rejection of a line, where, and that is a mathematical function, where there's a signal, ooh, that's better, where there's a signal equals then risk. Is it risk? Risk, yes, risk, which is going to be less than or equal to risk minus, less than or equal to 2R, where R is high probability. R is HP. R being reward. 2 risk. Oh, you figured it. You get it there. You get what I'm trying to say. Basically, that reads divergence plus the rejection of a line above or below us equals, or there is a signal where risk is less than 2 times reward, therefore high probability, and therefore should probably be written like that, shouldn't it? 3 dots, that 1 dot shouldn't be there. I failed algebra. I lost you at hello, says Claude. Yeah, I'm rubbish at algebra and maths generally, but there you go. It's just an interesting way of looking at it. We can make it as complicated as you like. The bottom line, the thing I'm trying to say here is none of that matters. It's divergence, rejection of a line signal. 3 simple things deliver a high probability. And it brings us again right back to the fact there is no holy grail. There is only probability. And on that bombshell, we have some serious posts in the group to look at, to consider, or maybe to review. I want my cursor back, so I'll get rid of that. I'll check, is my learned friend in? He's not. It's a shame he's not in. But someone in the group posted a beautiful post this morning. I do hope you've all read it, because it's massive. And he wrote I won't go through all the whole details. Below are the results of trading flip to flip, 24 hours a day, 7 days a week on the DAX chart. And then he gives us statistics, the past week, the past month, the past year, the past 12 years. And I'll just go to the past year. The past 365 days have given a 3,606% profit with only a 37% win rate or success, a profit factor of 1.046. And then it goes on the past 12 years. I don't know what that number is, but it's plus 108. I'll write it down because I struggle with the, how many commas there are. 108. This is over 12 years. 136. Someone else is going to have to tell me what this number is. 228. The 138, the 136 I can get. That's 136 billion. 228. No, I don't know. 334. 334%. So it's massive. It's a very, very big number. Not even a big round number, is it? The kind of thing that we look for in our sessions. 108, 136, 228, 334. It's available for everyone to see, as are the 5-minute results and some screenshots of the whole drawdown type thing. Everything is in there. And the key takeaways he goes on to write, and I think this is very well worth saying. Too many indicators / filters can become detrimental to both profits and losses. It's a balancing act. Hence, we generally stick with T2, B2, 2 at the top, 2 at the bottom. That'll do. Experience is an important key to building an edge. Knowing when to dodge or handle range, trading times, expanding wedges, markets open, news, chosen instruments, etc. will make a big difference to your drawdown periods. 3. Short-term gains don't always mean long-term gains. Ultimately, whilst your most recent backtest results can show you an accurate success rate, it may not accurately show the full cyclic flow of a strategy, including its worst drawdown periods. 4. As James, that'd be me, has always said, you can make a big gain, a small gain, a break even, or a small loss with the strategy. And it's fascinating to see the data match and confirm that. Point 5, he says, you can still lose more often and still make profit. Money, he calls it. My brain's still struggling to wrap my head around that one. Yeah, but I've said it all along, everybody, and you all. You that's with me, you that's in my sessions, you that's in my group, you absolutely know that to be true. That's why there's no negative feedback written about me anywhere. And there probably is somewhere. I'm sure if you find something written by those I live with, yeah, you'll find negative feedback then, all right. But it is what it is there. I'll suck that up and take it on the chin. Now, it is 6:18. We've been on for 18 minutes. If there's any questions relating to anything we've discussed here in this session, I'm happy to take those questions now. Else, I'll end the recording and we can go on to the deeper, as at now questions if you like. Obviously, this was back on the 5th of March. If I put those and leave them on and then go to as at now, well, you couldn't buy that because we weren't above the rapids. He's the first closed bar. There's your invalidation. It's still a win. If we look at the last trade, that's the first seller bar. Didn't hit north of the river, came very, very close. I would have hoped you saw the divergence and paused on that and waited for the red, but it is what it is because that's a failed W and there's pips in there. So there is a valid sell trade that worked, regardless of the fact that it came close to a stop. Close, no big fat smoky thing. Over here, we ping off. We've got, this is the first dry bar, a stop, a run up. 2 times would have delivered that, and the single bar there. But there's also, he's not really a MACD scalper because he went red, but there's a continuation fractal pivot trade. If we go back to today's open, where is today's open? It is 14.30, and we can say, yes, there's a dry bar. Are you a dry bar and are you 14.30? You're 14.31. You're not dry. You're 14.32. See, 14.30 isn't a dry bar. You can do nothing with that, nothing at all. But because the line is green, you're only allowed to go long, and there we go with a long, and then invalidation of 44, you're looking for 88, and 88 is up there somewhere, and then some. So always, if you just trade the strategy to the letter of the rule, you will make pips. People will say, oh, but I missed all that and I started trading over here. Well, are you above a line? No. Are you above a line? Yes. Okay. So there's an element of no man's land here, isn't there? Now, if we were using our yellow brick road, our trusted STL, etc., we wouldn't have any issues in there. There'd be buy trades that we can take. We wouldn't be able to take any sell trades. And that's the reality of the matter. I imagine there's no questions? No. In that case, I'm ending the recording, and we can switch to our main strategy if you guys want to and ask any questions on that. For anyone who watches the recording, thank you for listening. Please trade safe. I'll see you on the next session. Bye-bye.